This is your teacher Haris Bhatt, and you are seeing a YouTube channel, Learn Accounting with Sir Haris. I hope you all are fine. And today we are going to solve the question from A2 Accounting 9706 A2 Accounting. And this question has come in February-March 2025, variant 42. February-March 2025, variant 42. And the question is basically from budgeting, right? So let's see. February-March 2025, variant 42. And the question is from budgeting. Remember this, that I'm going to make you very clear. Let's see the video till the end. You are going to have the question of budgeting in your October-November exam 2025, variant 42. October-November 2025, variant 42. You are going to have a question of budgeting, which includes production budget, purchase budget, cash budget, and a budgeted income statement, a budgeted statement of profit and loss. In this question, which has come in February-March 2025, variant 42, the examiner has asked you to prepare budgeted balance sheet, which has come in back in 2014, 15, sorry, 13, 14, and 15. So let's solve that question. Yes, after 15, it hasn't come ever after, but it is an easy question. So AG Public Limited Company uses a system of budgetary control. The company prepared the following budgets for periods ending March 26. Sales budget is given all on credit. November, December, January, February, March. Trade receivable budget is already prepared for January, February, and March. Balance brought down is given. Credit sales. Receipt 1 month after sale. Receipt 2 months after sale. Balance carried down. So it means that there is no discount allowed in the question. Given in the question, there is no discount allowed, which is given in the question. Budgeted statement of financial position is given. Non-current asset, current asset, equity, current liabilities, which is a bank overdraft actually, given in the statement of financial position, February-March 2025, variant 42. So what is the first question? A part, state how a budget may be a motivating, influencing for staff. If a budget is prepared by taking the recommendation of the staff, it means that the staff will be motivated, that they will be able to achieve the budget easily because they are included as part of the budgetary control system. So they will feel motivated. A demotivating influence for staff is occurred when a budget is imposed on the staff, means that it is basically prepared by it is a top-down budget, not bottom-up budget, right? Top-down budget means which is prepared by the top management and implemented directly for the employees. So obviously, they feel demotivated because it might be possible that the budgets are not realistic. Maybe the targets are not realistic. So obviously, if the target is not achievable, the staff will be demotivated, right? And a bottom-up budget is basically prepared by the staff, by the employees, by the factory workers through the involvement of the factory manager, so that budget will always be motivating. Calculate the percentage of credit customer who pay in the month following sale. So let's go back toward the question. Customers, right? Credit customer who pay in the month following sale. So we talk about January sale, that is 1,02,000, and 1 month after sale means the month following sale, we are getting an amount of 20,400. So how much percentage of the customer is going to make the payment out of sales in the next month? 20,400 divided by 1,02,000 multiplied by 100. So answer is going to be 20%. So it means that the budget which has been prepared already, the sales out of sales, 20% is received 1 month after sale and 80% is received 2 months after sale. 1 lakh, 20% is received 1 month after sale. That is why it is 20,000, and the remaining 80%, which is 80,000, is going to be received in April. Yes, that's great. Let's move forward. I hope you got the point. The debtors believe that too much cash is tied up in trade receivable and wish to see the credit customer pay sooner. So debtors are of the view that too much cash is tied up with the trade receivable because we are only receiving 20% in the next month and the remaining is paid after 2 months. So they wanted the credit customer to pay sooner. They would like to see the effect of offering customers a 10% cash discount on sales made after 1st January 2026 if payment is received in the month after sale. So from January onwards, right, from 1st January onwards, whatever is going to be the credit sale, the customer are going to make us the payment. How much? 80%. Okay. So the customer who are going to make us the payment in the next month, they will be allowed a discount of 10%. And they think that 80% of customer will then pay in the month after sale and receive the discount, with the remainder paying in the month after that. So it means that previously we were receiving 20% in the following month and 80% in the 2 month after sale. But now we are receiving 80% in the next month, but after deducting a discount of 10%. And the 20% remainder will be received 2 months after sale. Prepares a revised trade receipt budget for February and March based on the director assumption about the discount. So we have to prepare the trade receivable budget. Let's do that. Trade receivable budget for February and March. So remember this, that you are not supposed to prepare the budget for January. You are supposed to prepare the budget for February and for March, right? So let's start with the balance brought down. Remember that the balance brought down of the previous month is going to be the balance carried down of the previous month will be the balance brought forward or brought down of the for the next month. So let's see. In January, as the trade receivable budget has already been prepared, the balance carry forward is going to be 172400, right? 172400 is going to be the balance carry forward for the January. So let's write it down. 172400 balance brought down. I will write here. Sorry, 172400. Now I'm going to write the credit sale. Credit sale I'm going to write which is for the month of February. Let's move back. We can see that easily. The credit sales for the month of February is 1 lakh. So I'm going to write it here. The credit sale 1 lakh. Okay. Then I will go with the total of this. Obviously, we have to go for the total of this, right? That is the available amount. It is just prepared in the way we used to prepare the sale ledger control account. But remember that sale ledger control account is supposed to be prepared in the T account format, where the budget is going to be prepared in the statement form. Less cash received. So cash received is going to be first 1 month after sale. Then there is going to be a discount allowed. You can write the discount allowed afterwards also, means at the end also, one and the same thing. And then we are going to receive the amount 2 months after sale. The things have been changed now. Why, sir? Because 1 month after sale, the policy of the budget has been changed. 80% of the customer who out of the sales of January, 80% of the customers are going to make the payment in February with a 10% cash discount. So let's do that. How much sales we have? Let's see how much sales we have for January. That is 1,02,000. So out of 1,02,000, 80% is going to receive in February, which is going to be 73440, but after a discount of 10%. So you will calculate 1,02,000 into 80%. Whatever the amount will become, you will you will get the 10% of that, which is 81,600 is the amount. 1,02,000 into 80%. So 10% of that discount allows is going to be 8160, and 81,600 minus 8160, you will get the amount 73440, which is going to receive 1 month after sale. I will just calculate it just for the surety purpose. Yeah. Then 2 months after sale is going to be the amount which we have received in the past also, that is 70,400. Why, sir? Remember that in December, whatever the sales was in December, in January, we have received the 1 month after sale of 17,600. And in February, out of December sales, we are receiving 70,400. So December sales, there is no change in December sales. There is no change of pattern of receiving the amount of sales from December sales. December sales will fall in January in the same way. 1 month after sales, 17,600. And in February, 70,400 will be the same, because they will fall in the same manner. Why? Because in December, from January, we wanted to get the amount sooner, not from December. So whatever the amount we are receiving in February out of December sales is going to remain the same, which is 70,400. Okay. Now let's go for the total of this. 272400 minus all this cash received at our end minus discount allowed, we'll get 120400. This is going to be the balance carried down, or you can write the trade receivable at the end. Yes, one and the same thing, no problem, right? This balance carried down of the trade receivable at the end will become the balance brought down of March, which is 120400. Now, we will see the credit sales, whatever the credit sales are going to, we are going to have in for the March purpose, for the March month. The credit sale for the March is 92,000. That is going to remain the same, going to be the same. So I will write 92,000 here. Then the total of this, I will write here 212,400. This is the total of the sales. Now, it's very easy now again. The February sales is 1 lakh. 80% of this is going to receive in March, but after 10% discount. So 1 lakh into 80% is 80,000, right? And 10% of 80,000 is 8,000. So I will write here 8,000. 80,000 minus 8,000, 72,000. We will receive 1 month after sale after a discount of 8,000, discount allowed. And the remaining we will receive 2 months after sale. That is going to be from the January sale actually. And from January sale, we know that out of 1,02,000 is going to be the January sale. The 80% is received, 81,600 is received in February, and the remaining 20% is going to receive in March, which is 20,400. If you will calculate 1,02,000 into 20%, you will get 20,400 without discount. Okay. Now the total will subtract the balance carried down. I will calculate 112,000. So this is how I will prepare the trade receivable budget for February and March and the balance carried down. We are done with that. So this is the basically the answer of this particular part. I hope so you understand the point. Let's go for this, that what is the marks for this. Prepare a revised trade receivable budget for February and March based on the director's assumption about the discount. It is not the assumption which is only related with the discount. It is that 80% will receive in the next month and 20% is going to receive in the 2 months after sale. Now we have to prepare a revised budgeted statement of financial position. Remember this, that the statement of financial position is already given. But after the discount, you have to prepare the budgeted statement again. So obviously non-current assets is going to remain the same. There is no change in non-current asset. That will remain the same. Obviously, non-current assets will not change, right? That is 4,26,000. So let me prepare it on the particular chart. The same chart I'm going to prepare because there is not much change in this. That's why. So I will write here 4,26,000. Then inventory again will remain the same. That is going to be 91,000. Okay. Then trade receivables, which is 172,000. If you just see the question, I'll make you see the question. That is, we have written, oh, sorry, here, that is 172,000 in March. But now, the trade receivable at the end for March is not 172,000, rather, it is going to be 112,000 because we are done with that. We have prepared the trade receivable budget for the same reason. So that is going to be 112,000, which we have calculated over here. Which we have already calculated over here, 112,000. So let me write it down. Okay. 112,000. Then there is going to be a bank. But I will not going to write the bank first. I will go with the share capital. Share capital will remain the same. That is 5 lakh, which is not going to change. Then retained earnings is going to change. Why? Let me make you clear very, very easily. Remember this, that retained earnings are 77,320, but in the previous trade receivable budget, there was no discount. And we know that discount allowed is an expense for the business. So because of discount allowed, the retained earning will decrease because it's an expense. And what is the amount of discount allowed for February and March? Because for January, there is no discount allowed, right? And January, there is no change in the, the the pattern of the question. So 8160 plus 8000, that is 16160. So I will write here retained earnings 77320 minus 16160, and the answer we are going to have after subtracting all this, that is 21660. I will write here 21660. That is going to be the answer for the retained earnings, the answer for the retained earnings. Okay. Now we have a bank overdraft of 22120 and a trade payables of 89500. So trade payables will remain the same, 89500, but there is a change of bank overdraft. Bank overdraft will be converted into positive bank. Yeah, bank overdraft is going to be converted into positive bank because it was overdraft of 22180, means you can write it down that minus 22180, and you will add minus 22180 and you will add 43840. 43840. I will make you understand. Don't worry. I will make you understand this. And the answer minus let me calculate it. Minus 22180, which is the bank overdraft in the previously, plus 43840, that is 21660. I will write here 21660. And now I will go with the total assets, and total assets is going to be 650660. So let me write here 650660. Over here also, obviously the answer is going to be the same, 650660. So this is how the balance sheet will remain equal. But sir, you didn't make us understand the bank overdraft point. Remember this, because we know that the total of the balance sheet of the two sides has to be equal. So if you go with the total of the equity section and current liabilities, the same total you should have. Yani if you write 650660, you have to write 650660 over here also, because total assets are equal to total liabilities. Obviously, you have to write the same thing over here. Then you can go with the balancing figure also. How come, sir? 650660 minus 4,26,000 minus 91,000 minus 112,000, which is trade receivable at the end. You will get 21660 bank, positive bank. But we can calculate that also to minus 22180 plus 43840. Let's go for the calculation. I will make you understand that how we are done with this. If you just look at the question, I think if you want to write it down, just write it down, because everything is done. Trade receivable budget, non-current assets, inventory, trade receivables, bank. With still we didn't understand how 43840 has been added in the bank overdraft and has created the bank in the positive way. I will let you know. Share capital is same. Retained earnings will subtract discount allowed. It is done. Current liabilities, bank overdraft has changed into positive bank. Trade payable will remain the same. The total of the balance sheet are equal. Now let's see. If you just look at the question, you will see that minus 22180 is going to be the answer when we have a trade receivable budget given over here. Okay. So we have a trade receivable budget. Let me rub some part of it. I think you have written it already. Just this one. Okay. So if you just see that in trade receivable budget, we are going to have minus 22180, which is the bank overdraft, in which in February, how much amount we are receiving? 20,400 plus 70,400. And in March, 20,000 and 81600. And after getting this amount, we are getting a bank overdraft of minus 22180. But what has changed now? See, minus 22180, right? Now, how much we are receiving, my dear? In February, we have received 73440 plus 70,400. And in March, we are receiving 72,000 and 20,400. Where in the past, through which minus 22180 has come, we have added 20,400 plus 70,400 and 20,000 and 81600. So let's calculate it. Let's calculate it, that how much we are receiving in February in the past, 20,400, through which we have calculated minus 22180. But now the policy has changed. So 20,400 plus 70,400. Oh, sorry, plus 70,400. So 90,800 we have received in February. So minus 90,800. Why? Because this amount is now not now received as per our new course. We are receiving how much? 73,440 plus 70,400. So we are receiving, let me calculate it again, 73,440 plus 70,400. That is 143,840. So I will add 143,840. This is for February. Whatever we have received in February in the normal course, we have subtracted that, and whatever we have received in the new format where 80% with the discount, 73,440 plus 70,400, we have added that. Now I will subtract whatever we have received in March through normal way. That is 20,000 and 81600. Let me calculate. 20,000 plus 81600. That is 101600. So I will subtract that. 101600. And I will add what I am going to receive now. That is 72,000 in March plus 20,400. And that is 92,400. Right? So instead of adding 90,800, we should have added 143,840. And instead of adding 101600, we should have 92,400. So the answer, if you calculate it, you will get 43480. So that's why the bank has changed into positive amount plus 43 minus 22180 will become 43480, not rather 43480. Now it will, because 43 to the minus 22180 I've written over here. So it will become 21660. You can calculate that. You will get the answer of 21660. Because now the bank overdraft of 22180, after adding 43480, which is the resultant amount of whatever cash was coming previously, and now whatever cash is coming into the business in February and March with discount. So the answer will become positive bank of 21660. That's what I have written in the balance sheet. So this is how we can correct the balance sheet and we can equalize the balance sheet. Remember that if you are not able to do that, you haven't much time, you can go for the balancing figure also, right? But the best thing is just to go for the calculation. But there was only one mark of that. I have seen the mark scheme. There was only one mark of that. Next is state the reason why the company might find it useful to prepare its budget using spreadsheets rather than manual. So it is very easy that there is less chance of arithmetic error. Obviously, there is less chance of arithmetic error. Arithmetic error will be avoided. Then speed and accuracy. You will have more speed in the processing of the data, and accuracy will also be maintained. Then you can go for the recalculation easily, quickly. Security can be asked by going for a private security check, right? Or a security key, password, right? Then multiple users can use the application which are known with the understanding. Sort, select, file, these kind of things, functions can be used, right? And better understanding of the computerized accounting also will be a part of the advantage. Now let's move forward. When actual results become available, they are reviewed with the aid of variance analysis. State 2 advantage of using variance analysis. Obviously, variance analysis is the difference between the actual results and the budgeted results, right? So it tells us that how we are varying, how actual results are vary with the budgeted results, and we can go for the corrective actions can be taken, right? We can also use management by exception. It is also used for inventory valuation also, right? And how much the actual results deviate from the budgeted cost and revenue. Okay? And then we can go for the what are the reasons and causes of the variances, favorable or adverse, whatever it is going to be. Then we can go for a corrective action and leads to improvement in the future plans. And we can take the remedial actions to go for this. Okay, now let's do that. Next part is going to be the last one. Let me wrap it up now. I hope you understood. If you have any problem, you can WhatsApp me also. That's not a big deal. Uh-huh. Okay. Now the examiner is asking you that when the most recent actual results were available, they are analyzed, and that analysis showed a total fixed overhead variance of 4,000 adverse and fixed overhead variance of 14,000 adverse. The directors are concerned that these variances are adverse and have decided to reduce the fixed overhead of the business. Overhead expenditure variance, total fixed overhead variance of 4,000 adverse and a fixed overhead volume variance of 14,000 adverse. Directors are concerned about these variances and decided to reduce the fixed overhead. The fixed overhead include the salaries of 2 supervisors who oversee the activities of the machine operatives. The directors are considering making one of these supervisors redundant. Advise the director whether or not they should make one of the supervisors and justify your answer. The most important thing is this, that if the fixed overhead total variance is 4,000 adverse, it means that it is because of the adverse volume variance, not because of the expenditure variance. Expenditure variance is still favorable by 10,000. Expenditure variance is favorable 10,000. That's why even with overhead volume variance of adverse of 14,000, we have adverse variance of only 4,000. It means that is not because of the expenditure variance that we are facing an adverse variance. It is because that actual output basically is less than the budgeted output, right? Because of the actual output is less than the budgeted output. If you will make the supervisor redundant, one supervisor, then the machine operatives, that there is no quality assurance. And because of low quality insurance, obviously, the quality will be affected and we will not be able to retain the customers. So in future, we might be able to, not able to retain our customers because of the redundancy of the supervisors, because that will decrease cost in the future, obviously, and it might be possible that for future plan, our uh, overhead variances will have a positive result. But currently, if you just look at the question, so the problem is not lying with the expenditure variance, it is with the actual output being lower than the budget. So this is how, and if we do it, then you know that it will be have adverse effect. Quality will be defective piece can be prepared, and a customer might not be satisfied, right? But maybe it will improve profitability in the future, right? And then definitely the other supervisor will also feel demotivated that I might be redundant also, right? It is better that we should go with the not rather than redundancy of the, we should go for the increase in the actual output that will be less than the budgeted output, right? So this is done. We are done with the February March 2025 variant. Thank you very much. Please subscribe my channel and follow me Instagram on Facebook. And I'm going to go with the next video, inshallah, with the solutions of the exam papers. As soon as I will get it, I will upload the exam papers. And I will also discuss with raw mark adjusted marks and the weighted marks, inshallah, in the next video within 5 to 6 days. Thank you very much, Ji. Take care and God bless you. Allah Hafiz.